When I first bought Celsius stock, I had a very simple thesis, which was that existing legacy energy drink brands had about as much sugar per serving as consuming a candy bar like a Snickers, and as a result, people wanted healthier alternatives, including gym enthusiasts and influencers, and they preferred Celsius, which had very few calories and no sugar, yet had the same energy boost. And I saw that it was rapidly translating into improved sales, rapidly taking market share. Here you can see analyst estimates in the years ahead. And then this was solidified by Pepsi taking a $550 million stake in the company. This was August 1st, 2022. That's an important date to remember. We'll come back to that in just a second. So they took a sizable stake in the company. And then I want to review the terms of this deal. I go to AI Ticker Chat. Chat is now completely free to use. So I want to learn, what was this $550 million investment about? And this granted Pepsi to become the primary distributor for Celsius. $550 million, giving them about 8.5% of the company. There's a preferred investment, so they're getting around 5%, return interest. But also Pepsi agreed to pay $250 million in multiple tranches to effectively facilitate that they become that primary distributor and Celsius pay off their existing distributors. So this reflects that $250 million incremental amount does reflect they really want to make this deal happen. Not only are they investing in the company, but they're investing saying, hey, we'll cover your costs to switch over to us. So this is, if this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. In this video, I'm covering not only why did I originally buy Celsius, but why I actually recently bought a little bit more, around $33 per share. I called it out to my subscribers last week at Unrivaled Investing. If you enjoy educational investment videos, please make a point of hitting that thumbs up, hit that subscribe button. And subsequently, as investors saw the Pepsi spigot get turned on, they're super excited. All this money coming in, stock made new highs. But it goes both ways. And now you can see an empty Pepsi truck in this background because this is from a recent press conference or a press release or a sell side transcript where they talked about, the Pepsi's been managing their inventory, and there was a $47 million headwind during the first half of this year as they were optimizing their inventory. This is talking about supply chain timing, logistics, becoming more effective. I mean, Pepsi's a behemoth, so they're managing this. And then this continued in the third quarter of this year to a very sizable 100 to 120 million. That's much bigger than was previously. And so this surprised disappointed investors to sort of give that context. And that's the reason why you've seen Celsius stock over the last 6 months lose over 50%, over 60% of its value as you had this destocking, a deceleration in the business, and it's causing investors to wonder, is the growth over? I personally do not think so, because if you look at their market share, so this reflects consumer preference, they continue to take market share, and you can see how Red Bull and Monster have sort of been stagnant, whereas Celsius has been continuing to inch higher. And that's a super important data point because market share is an indication of, hey, does the end consumer like this? And if you're unrivaled, then you will continue to inch away, taking away that market share. And I think that's what the data continues to suggest, whereas the recent developments from Pepsi create a lot of noise and uncertainty about where does this go from here. Now, I don't think my typical holdings, I would say there's a sense of obviousness, like, hey, this will be much, much bigger in the future. I would say with Celsius, you have a less of that element because it's just unclear. Will this be 2x, 3x bigger in the future? A lot less certain. That sort of thesis of, well, could it just be a consumer brand that, sort of peters out or flat? You sort of have flat growth going forward. You have more uncertainty in terms of their future. That said, I did recently buy more, so I'm going to walk through the thesis in just a second. As always, this is not financial advice. And also, recently, a premium member of the exclusive Unrivaled Investing community shared, this is a direct quote, "Currently, the profit I've made thanks to cult out ideas from Daniel can pay for 30 years of subscription. But the most valuable part has been the learning experience. I've been a very satisfied member since June 2022. Since then, I have never doubted to renew. So if you're looking for compelling ideas, come check out Unrivaled Investing." So going back to August 1st, 2022, which I mentioned earlier in this video, isn't it an interesting coincidence that 2 years to the date of that Pepsi deal, management announces that the board of Celsius adopted a executive change in control where certain executive officers, CEO, CFO, maybe a couple other of the top dogs would get a nice payout of equal to 2 times the sum of the executive officer's salary plus 100% of their target bonus if they were maybe to get laid off after a change in control. So in other words, if maybe Pepsi acquires them at some point in the future, they could get, and Pepsi says, hey, we don't need all these managers. You could get that payoff, because they say, hey, it's not because you did something wrong. It's just, hey, we want to cut costs. We want to show profitability. We're putting these deals in place with the employees, with the management, that they will get a payoff in the event of a change in control. So this is a key aspect. It's an interesting coincidence. Literally 2 years to the day. And then let's look at Pepsi. So Pepsi, this is a low growth, behemoth. You can see 0.8% growth during the most recent quarter. They have these adjusted figures that are roughly 2% growth. So 2% trading at 22 times earnings. That's ballpark 22 times trailing earnings. Gives you a sense of where they are. And then if you assume Celsius at $33 per share can get to the same margins as Monster, so hopefully I don't scare you with this AI generated image, then assuming zero growth in Celsius, it's trading at 23 times earnings to Pepsi. So that's back out the cash and the preferred interest that Celsius has, and they're paying preferred interest to Pepsi. That is very intriguing to me. What I'm saying is, from Pepsi's perspective, their business is currently being valued at 22 times. Then you have a brand that's growing much faster than their consolidated portfolio. And by the way, at the current market price, it's effectively the same valuation as Pepsi. Now, this assumes their margins can continue to expand to Monster's levels, and that's something management and Celsius has said they could do. I bet Pepsi thinks that's the case as well. But I view this as very intriguing. Like, why wouldn't Pepsi consider taking a bigger bite out of Celsius? Another key point is that not only does Pepsi have a history of acquiring smaller, faster growing brands, but their 5% preferred convertible, is convertible into Celsius stock at around $25 per share. So I'm looking at this thinking, another interesting data point. Could this create a floor for the stock? Because this is, keep in mind, that $25 that it's convertible, that was based on August of 2022. They've continued to grow significantly. Their underlying profit profile has continued to improve. Their cash flow, their cash balances continued to improve. So looking at those data points, wouldn't, and Pepsi historically effectively said, hey, we're willing to convert our shares at $25. They're getting around 9% of the company. It's now around 22 million shares out of the adjusted around 240 million diluted. That gets you to, a very interesting situation. Wait a second. Like, the company hasn't gotten worse, I'd argue. They continue to take market share. And Pepsi has previously indicated, hey, at $25 a share, we're interested. And that was 2 years ago. Company's growing. So $33 a share, it's a comparable valuation to Pepsi. By the way, ignoring the Pepsi, conversation, if you think about what could Celsius do potentially now, and this is using AI TickerJat's predict feature, it's saying, hey, maybe it gets back to some sort of teens growth, margins continue to improve, and, what does that end multiple look like? And it's suggesting maybe 100 to 200% upside. I personally view the margin profile as higher and the growth potential as lower, just because I think margins are more likely to deliver. And I think growth, it's just a very tough and competitive market. And, thinking about that, I'm still roughly getting to 100, 200% upside, potential. Always stock price can go way higher, way lower, depending on the execution. Thinking about it of, okay, so on the one hand, you have Pepsi sort of saying, hey, $25 a share, we're interested in we bought 9% of the company at $25 a share effectively. Why wouldn't they be willing to buy the whole thing at, around then? You'd have to assume they would have to, pay a premium to get ownership, because ownership's worth a premium, getting all that cash flow. But then if you assume, hey, let's assume they don't even get that and they continue to expand internationally like they're doing, then maybe even with tough competitive conditions, maybe they grow 5-10% a year. but they get to those monster-like margins, then you're talking about, a very satisfactory return potentially over time. That's the reason why I personally bought a little more Celsius stock recently. It's not one of my top positions, so I'm just sharing the thesis on one of my holdings, because investors frequently, folks tune into Unrivaled Investing, they go, Daniel, what? They either comment about my hair, which is like, okay, noted, thank you. I probably need a haircut. I recognize that. But then they go, Daniel, what do you own? And occasionally I call out a holding like Fairfax, which I did a previous video, and now I'm talking about Celsius. I personally prefer companies where I view the growth as more certain. There's more alignment with founders. But this is, and there is a company that I actually just bought today that fits that profile more. But this is the reason why I actually just bought a little more Celsius, not a game-changing position last week. And I hope this video has been helpful for you. If so, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.